Hello, traders. This is Michael coming to you from GammaEdge on Tuesday, April 29th with our pre-market morning strategy and briefing session. As always, here at GammaEdge, we start with our three pillars: sentiment, structure, and trend. Currently looking at our market trend model. Market trend model is based on the tick index. You can research that at any of your favorite investing websites. Basically, in the short definition, it is an index that monitors buying versus selling. Obviously, if there's more buyers in the overall market, the trend is up in the tick, and if there's more sellers, the trend is down. This bolded white CT here is our cumulative tick that's aggregated buying versus selling on the tick index. As you can see, it's from lower left to upper right and continuing to make new highs, indicating that buyers maintain control of the overall market. And then we have three shorter term moving averages. This gives us a trend indication. And then we add a time component so we can look at it over multiple days, weeks, and months to get an idea of who is winning the battle, buyers versus sellers. And as we said, we've continued to see a nice upturn in the overall cumulative tick and tick index. So the buyers continue to try to take control of the overall market. As long as the bolded CT stays above these shorter term moving averages, we will continue with our bullish state in our market trend model. If this does start to flatten out or roll over under the shorter term moving averages, when we would become a little more cautious and looking for a little bit more pullback. We've now emerged above our colored ribbon. This is our longer term positioning model for us here at GammaEdge. And as long as the bolded CT stays above these colored ribbons, we'll continue to put capital to work on a longer term time frame. And then our mechanical P-trans to PX portfolio, or P2P, that is based on the signals of our market trend model has triggered. So we've been entering positions on that also. Looking up here, our breadth indicator, new highs versus new lows. We've had multiple days now where the new highs are outpacing new lows, as indicated by the green above the red. So more stocks are being bought than sold. So as long as this continues, again, buyers will continue to maintain control of the market. And then our filtered cumulative tick, this is basically filtered via plus 1,000, minus 1,000 larger block orders. These are obviously institutional orders that come through. And again, staying above the zero line indicates that buyers are still maintaining control of the overall market on an institutional level, as well as a shorter intraday and swing level also. Moving on to our SPXA. This is our cruise ship positioning. We look at the SPX options market. It's the largest and most liquid that we can view through the lens of positioning. Obviously, the SPXA is more institutional via the monthly and quarterly expiries. We are still put dominated on the SPXA as of now. It does continue to improve via this net delta column. We continue to see the reds becoming less and the greens emerging. This is indicating that out of the money call speculation is coming into the overall structure, but we still do have a significant amount of in the money puts above us. Obviously, we'd like to see these completely change to green if we want to have a significant move to the upside for the overall market, or maintaining the move that we have so far. The green net delta below spot price is a supportive type action. If we just have, as we have discussed for multiple days here, that any pullback, as long as the in the money calls via the green negative net delta stay in place, that we would look for to get involved in the market as a supportive type action. Obviously, 5,500 has been a key level to the downside now. We dropped below that yesterday and tested around 54.80, then rebounded very quickly, which is what you want to see in a bullish market, is weakness midday that gets bought up very quickly and then rebounds back to at least the opening print, or at least higher by the close. To the upside, we're watching 5,600. We'll look over that on multiple expiries here, but that's the key upside that most likely a target could get to if we get above 55.50. Moving on to the SPXP. This is our cigarette boat. Obviously, these are shorter term expiries via 0 DTE, as well as weekly and monthly expiries. The green box is indicating that we are call dominated, and when the structure has been improving, obviously, over the past few days to weeks. So out of the money call speculation to the upside is alive and well, and you'll notice 5,600 is that PX level. Historically, through our back testing, this is a level that if price reaches there, we could see some pausing, stalling, or possible profit taking. And then COTMC, this is where out of the money calls go in the money. So that confluence there, 55.85, 5,600 could be an area where we see some stalling or profit taking. To the downside, our transition level, 5,500. Any pullback to that 5,500 level that is met with buying and market trend model is still in a bullish state, as well as our intraday vol M command indicating market participants are speculating with out of the money calls would be an opportunity to get involved. If we do drop below 5,500, I've referenced that lower level there, 54.65, 70, 80 level that will still be supportive due to the in the money calls below us. We would have to see a significant deterioration of the overall structure and sentiment below us for the market to have a larger move back down towards 54.50 as well as 5,400. So we'll continue to watch this day over day. But again, key levels 5,500, 5,550, 5,600 heading into today. SPX 0 DTE, we have our legends box over here, understanding where our transition levels are. Again, key level heading into today is 55.50, that PX. We've outlined that pre-market. If we get above that, I believe we have an opportunity to move up towards the 5,600, but then you'll see some negative net deltas coming in overhead. These can be a dampening type effect as these are in the money puts. Obviously, if these erode or are closed, or we do have out of the money call speculation swamp these levels here, then we could move to 5,600 or above. We've indicated these two higher net OI strikes here around 55.70 and 55.85 that again could be stalling points to the upside as we see that negative net delta come in. To the downside, transition level is very narrow. We like that. It's unambiguous and gives us a very easy opportunity. If the price comes into the transition area and starts to see some reaction or stalling and move back to the upside, this is an opportunity to get involved as we have in the money calls below us. Then these can have a dampening type effect as well as softening, more like a sponge type as price moves down into these levels. Even if we're into this overall DEX transition level, pull back to 54.65, 54.70 would still be constructive. We'd obviously be below the transition area, though, a little bit more negative area that we would like to stay out of. Drunken sailor range here, this is 55.50 down towards 54.50, pretty much the areas we matched yesterday. The drunken sailor range, for you people that are not familiar with GammaEdge, are just lower exposure areas where spot price can move around pretty violently back and forth, and just you can get chopped up within this overall drunken sailor range. So we prefer to take trades either above the drunken sailor range, moving through the 55.50 level up towards 5,600, or to the bottom of the drunken sailor range, moving down lower. Or if we're within this overall area, these edges can be opportunities to get involved, obviously with a little bit smaller position size, as these are a little bit higher risk areas. But historically, these are areas that do dampen and soften price, and we see supportive type action into these higher gradient net OI areas, and these are in the money call dominated, so these can be supportive type action. So heading into today, obviously 55.50 key area to get above with the opportunity to move up towards 5,600. Any pullback down towards transition area that is met with buyers and MTM model maintaining, and then we'll watch our intraday vol M command for indicating where market participants are transacting large mass of options contracts. We would anticipate this to be an area to get involved in back to the upside for a bounce. And then again, below this area, we might anticipate some more weakness and choppiness down towards the 54.65 area. We bounced around the 54.75, 54.80 area yesterday, so that'll be a key area heading into today. On to Delta Bounce for SPXP. Just a quick summary. This is market positioning of options speculators maintaining above the zero level on the left-hand plane, right-hand plane, as well as the delta balance indicates that call speculators are in control. So on out in time, this is pegged at 1 and we're above the zero line. So call speculators maintaining control. Slight drop heading into today with the right-hand plane that's out of the money call speculation, but still right at that zero line. The QQQ, again, maintaining above zero, call speculators in control. We've talked about this really leading the overall market, and it was one of the first ETFs that turned back to the upside, indicating that call speculators were alive and well. IWM, again, above zero and projected up to stay above zero, and delta balances at 1, so call speculators alive and well and maintaining control in the IWM. DIA, a little bit of short-term weakness possible as we move below the zero line on the right-hand plane. This is out of the money call speculation, and delta balance confluently dropping, but then projected on out in time, we recover above zero and head back towards 1. So we may see a little bit extra or a little bit more weakness in the DIA, other than the SPY and Qs and IWM, but then we recover above zero on out in time to that one delta balance, indicating that call speculators are in control. GEX ratio living around the one level. Yesterday was kind of a inside consolidation day, doji day. So really some indecision with the overall price action. So we'll continue to watch this GEX ratio. If spot price continues to move up, but the GEX ratio continues to drop, that would indicate that short-term dated call gamma is leaving the overall complex. So that would be a cautionary sign. But if we do see spot price continue to move up, as well as GEX ratio continue to move up as we capture more of that out of the money call gamma, that would be indicating that we can sustain this move to the upside. So again, short-term positioning around that one level, indicating that call speculators are still maintaining control. So we'll watch this for any divergence heading into the next few days. Heading into our net stack command, this is our highest sensitivity strikes, obviously 5,400 in the money calls. Very supportive on any pullback. This is obviously significantly below spot price, but even the in the money calls below us with the delta and charm can be supportive. 50 to the upside on the third order Greeks. We've noticed those are highest sensitivity levels, and why we pointed that out for today. If we move through 55.50, chance to move to the upside 5,600. Let's go ahead and go quick overview of our trading plan for today. So it looks like spot price here, pre-market's dropping below 5,500. So we were talking about that possible weakness below 5,500. Then we look for the 54 kind of 60, 70 level. We're into the top of the transition now pre-market. We still have about 20 minutes to go. So again, we'd look for this to be supportive. If we get below the 54.70, we'd probably look for a little bit more weakness down towards 54.50 and 54.30 to the upside. The 55.50 is very important to get above and stay above as we move up towards that 55.90 and 5600. So we'll continue to watch those key levels. We'll watch our market trend model to see if it maintains a bullish state, as well as intraday vol-in to see if market participants continue to speculate to the upside. Well, with that, everybody have a great day, and we'll see you later. Thanks.